Hi, my YouTube friends. This video will explain the turmoil regarding the recent Evergrande collapse and the plunge of the Chinese internet stocks. It is also a follow-up to my recent video. I will also present 3 important lessons to learn from 3 successful investors in regards to the current situation. Recently, I made a video stating that we could be nearing the bottom for all the Chinese internet stock. That was before the Evergrande saga. Now, do I think we are near the bottom? Yes. But, no one can perfectly time the market. Especially in the last week, these shares took another leg down, tumbled and sink into oblivion. As you watch in horror. As a successful investor, you will need to have the skills to identify and isolate the noises in the market. In regards to Evergrande's situation, and as a Chinese internet investor, you will need to ask yourself 2 questions. 1. Does the failure of Evergrande, a property developer, has a huge impact on the China internet sector? Both sectors are very much unrelated and the impact is negligible. 2. Evergrande debt problem has been around for years, how come it only surfaced now? Before Evergrande news came out, there isn't much negative news in regards to the China regulation. I believe this could be the last attempt to push the price down by the market. This is my personal opinion, please do your own diligence. No one can time the market. Regarding the Evergrande saga, I present to you 3 quotes from 3 successful investors, hope you can learn, improve and be a successful investor. 1. Charlie Munger. If you can't stomach 50% declines in your investment, you will get the mediocre returns you deserve.
In fact, you can argue that if you're not willing to react with equanimity to a market price decline of 50%, 2 or 3 times a century, you're not fit to be a common shareholder and you deserve the mediocre result you're going to get.
2. Peter Lynch. Your ultimate success or failure will depend on your ability to ignore the worries of the world long enough to allow your investments to succeed. 3. Benjamin Graham. The market is a pendulum that forever swings between unsustainable optimism, which makes stocks too expensive, and unjustified pessimism, which makes them too cheap. The intelligent investor is a realist who sells to optimists and buys from pessimists. In conclusion, investors will need to think logically, and not emotionally during such times. Only during such a crisis where wealth will be transferred from the impatient to the patient. I have videos on how to prepare yourself to be an investor, it is in my playlist if you are interested to be a successful investor. Please like and subscribe to my channel for more financial related topics. See you in my next video.